The bell already rang today on the markets here in the US, and we closed about a little over 40 minutes ago. So, what actually happened today? This is our post market analysis for today. Well, all eyes were on the Fed meeting, which actually concluded today. It started yesterday and it was a 2 days meeting. So, they said we may be doing what everybody expects us to do, meaning tapering. And by tapering, they mean reducing the amount of money they inject into the economy that they started doing since 2020 because they needed to support the economy. So it's a good step in the right direction. Why? Because they cannot seemingly delay this any longer because they have to do something. Now, the thing to look really closely is around how the economy is going to continue to improve, or how signs or economic indicators are going to send signals that if we see in the next coming months that the economy is still strong, especially the job market, because the sentiment within the Fed committee, it's a little bit mixed. You have a half or most of the committee members actually think the economy is at a point where the Fed needs to stop injecting money, supporting the economy, because the economy on its own can continue the growth. But, there are remaining or other parts of the Fed committee also thinking, well, I don't know, because everything it's now tied to Delta variant and the impact of that variant in the economy. Because if people are not able to go back to work in order to have that full employment, well, it's mainly because variant. All right, that's a big issue. Also on the supply chain and of other parts of businesses being also still not heavily but somehow impacted by this whole variant. So these are the kind of highlights of what Jerome Powell said today at the press conference. So they're going to do something. It's going to be sooner, but it's going to depend on how the economy improves, or signs of the economy improving, especially the job market. Now, the other item we needed to look at today was about the debt ceiling. It seems like we are approaching some kind of agreement between politicians in Washington about doing something on this debt ceiling thing. So on top of that, you also have Evergrande. As I mentioned this morning on the pre-market analysis, Evergrande, finally we have some sign of relief, because the banks, the company in China, Evergrande, said they're going to finally be able to pay the upcoming coupon, meaning the interest on the debt, but this only for the local investors, so investors in China. Now, the big question remains on how about foreigners? But it looks like, investors were a little bit relieved this morning, and that's why we've seen a really choppy session, but really big in terms of gains as we saw today. At the point, this was already all up 500%. 500 points. This is the Dow Jones, and we closed around 1%. Almost same thing for S&P 500 and the Nasdaq over 10%. So things like, seems like investors are now eager to take some more risk, especially as we see this whole tapering from the Fed go, and also this whole China Evergrande, which I think was a little bit overdone by now. So there is less uncertainty moving ahead, so we can expect to see some more green days finally ahead of us, as the market is a little bit bouncing back to where we were a couple of weeks ago.